Hey guys, I hope all is well. Welcome back to the Profit Madness channel. My name is Alex, and in today's video we're going to be looking at Bitcoin and why I think that a crash may soon come, and we're going to be looking at that today. But before we start, as always, remember to like this video if you find this type of content useful, and subscribe with notifications on for more content like this. So last time that I've done something like this, it was actually 5 months ago on May, and quite honestly, not much has changed because, as you guys may know, we went inside of a major consolidation. You have Bitcoin on the right. You can see that we are still consolidating at the same exact range. So honestly speaking, many of the things that were said back then are still standing valid. But I'm currently doing something on Involio where I'm asking you guys to comment down below my post when I do something like this, right? Where you basically tell me what you need help with the most, and you can also give me video ideas, and essentially I'll deliver. So today I'm covering the question that Augish here asked me, which is, can you share why do you think that Bitcoin hits the 36k range? I agree too, because that exponential moving average. So we're going to be looking at this question today. If you have any particular question, anything that you want me to help you with, please either go on Involio, and make sure to follow me on Involio, by the way, guys. We are 60 followers away from 4,000 followers over here. So if you have any requests, make sure that you either leave them under this video over here, or you can also go on Involio, and when I post something like this, make sure to answer in the comments below, okay? So without further ado, let's have a look at Bitcoin and the total chart. So these charts, I don't remember exactly if you have seen them before. I don't think that you have, because this was initially shared to my community. But essentially what I've done here is do a side-by-side comparison of the total one and the Bitcoin chart, okay? And what I was looking for is reasons to expect what I think will come next, which is a pullback to the downside that we haven't really seen of for now, okay? Especially on Bitcoin, because you can see that there is a miscorrelation between the total chart and the Bitcoin chart. You can see the Bitcoin chart looks like it's holding up well, but of course, we look for correlations between the total and the Bitcoin chart to assume that something like this may happen. And you can see that the Bitcoin chart, for example, has liquidated the previous all-time high, okay, but the total chart hasn't, okay. So there is a degree of bearishness that is provided within this simple information that we can see between these two charts, because if I go from top to bottom on the chart, or the total one chart, you can see that we are actually struck within a golden pocket area. And when I personally refer to golden pocket, some people on YouTube or on the internet in general may refer to the 61.8% of the Fibonacci as the golden pocket, which is not wrong, okay? But I also believe that there is multiple levels that we should pay attention to as well, that are in the same area as the 61.8%. And when I refer to the golden pocket, essentially look at my golden levels over here, okay? All these levels over here, in my personal opinion, are golden pocket levels, or at least the way that I like to call them myself, okay? So you can see that we are actually within a bearish formation for this current range in which we're in. And also, if you are not familiar with Fibonacci's, or maybe you don't really use Fibonacci's yourself, you guys have also requested me to do a technical analysis course for beginners, and I will deliver on that as well. But you may also use something like, for example, the premium discounts range, okay? Let me actually reverse this. And I think that we can all agree that right now we are currently dealing in premium territory on the total one chart, right? Because we initially set the range. So no, we haven't really spent this much time on the discount, because you should be measuring the range from the low that actually, realized the range, correct? So this is essentially the time that we spent inside of this range, okay? And you can see that after marking this bottom, we instantly started going into premium territory. And since then, we started to spend quite some time inside of the premium. Yes, we hit the equilibrium point of this range, which is this 50% year, but we instantly bounce from it. Now, if you are a beginner and you see a bounce of this nature, you may see, wow, this is bullish. How can you bearish? How can you be bearish? And it's not exactly like that, because when you have wicks, right, eventually they do get filled. Like if I go on the left, right, and let me see if I can actually do this. Yeah, okay, I can do the bar replay. But essentially, right, you at some point, right, if you ignore everything that has happened afterwards, let's see if I can actually make this a little bit darker. So, oops, my bad. It's not this what I was referring to, but this. So if you try to ignore what has happened afterwards, right, at some point, right, here we were at $3 trillion for the total market cap, and we had this wicks. You know, while this was going up, you know, especially in this manner that it happened, right, this parabolic manner, a lot of people didn't believe that we will go down ever again, especially to fill wicks, right? But then if you fast forward to what has happened next, right, and I'm gonna be removing this second. Let me actually remove all of this. Eventually, you know, we went back to fill the wicks, and if you look at where the bottom, the current bottom came in, it's actually below this wicks over here. Sure, we went a little bit lower. It doesn't really matter, because what we did is also, you know, fulfill this area over here, which is full of wicks. Why am I focusing on the wicks? Because I'm trying to tailor this content to beginners, and what beginners need to realize is that the movements that we see on the charts are due to the fact that the market is seeking liquidity, essentially. It doesn't matter if it has to go to the upside, to the downside, or to the downside. It is essentially going to where the liquidity pool is. It measures how many orders there are at particular levels, and its job is go from one point to another after taking the liquidity, because it is the liquidity that it takes that creates a situation where it's able to move from that price to another. And I'm really simplifying this because I don't want to get too much into this today, but please subscribe if you want to learn more about liquidity. You can see that you know, after hitting this level, like, have a look at how vicious they are when they do this. You know, after hitting this level of liquidity over here, this wick over here, it only tapped a little bit below it, and then it created this sort of a bull run, right, that we know of today. So we can understand, right, that there is an importance behind wicks and liquidity. Now, if I go and show you Bitcoin, here we actually have a very similar situation. The only difference is that we are doing that at all-time highs. Okay, have a look at what has happened over here, because it's very crucial that you guys understand it. In order for you to understand why I'm calling for the things that I'm calling for. This is the previous all-time high. Okay, by the way, I'm on the weekly time frame, and you can see that every single time, right, that we tried to get above it, we didn't spend too much time above it. Okay, it was mostly wicks, by the way. Sure, we do have a bunch of candle closures. If I go on the monthly, it actually shows it a little bit better, because there were only 2 instances on the monthly time frame where we closed candles above it. And when we did, we failed to maintain support above the previous all-time high. Okay, so you know, when I see something like this, right, it really smells like liquidity grab to me, because we had this full move to the upside without any significant retracement. Now, if you're new, you may say, well, Alex, we did have a significant retracement from the current all-time high down to 49K. Correct, but you know, in the crypto market, we are very used to see corrections down to even 50%, honestly speaking, which is pretty much one of the first targets that I have inside of this green area. And I will also tell you how I got this specific area. If I'm not mistaken, we got this 50% correction, yeah, after making this all-time high, the 65K all-time high. During this summer of 2021, we got a correction down to 55%. So it is not unusual for Bitcoin, right, to do that. And, you know, if we were to go down, right, to 33K, or better off, if I were to tell people, right, that look, there is a chance that Bitcoin will revisit 33K again, I will be most likely with backlash, unless it is somebody that knows why the market moves in a certain manner and why it is eventually prone to do that. Now, so we have seen, right, that the market is not unusual to pullbacks of this degree. Let's also have a look at 2017 and what has happened prior to that year. We actually even got a completely different situation in this current example, because we went down 70% year as well. In 2019, you know, we actually have a very similar situation as to what we have going on, and I will get into this as well today, because here you can see that not only did we achieve that 50% threshold, which I'm trying to get to today, but we actually went and done 71%. Now, you may say, well, this was due to the pandemic. Correct. But it's also a very simple golden pocket retracement. You know, this was a bullish Fibonacci. And, you know, I may get a little bit technical with this, but we also got a market structure shift. Essentially, what I mean when I say market structure shift is that, you know, here, essentially, you were going down, right? And then, for the first time in a while, you had the start of a potential bullish trend. And what we look for when we see things like this in the chart is the wipe of a significant high on the left. Okay, if you were just going down, right, your first potential invalidation of the bearish trend comes after wiping this high over here. Okay, and you can see that we actually proceeded a little bit higher. You can also see that after wiping this specific high, we actually had a rejection candle. Honestly speaking, we could have also went down and retraced, right, from this particular level down to these levels over here, and still continued higher from there, honestly. But because, right, we actually went and wiped more highs and more significant highs on the left, we understood that to be a more important move in the making to the upside, which is why we actually went and done one of the craziest runs that Bitcoin has ever done today. Not from a percentage basis, but from, you know, a price increase and the way that it was able to, you know, make it so that a lot of people will pay attention to it. Of course, that is also things that the media does, but that is beside the point. From what Bitcoin has essentially done there, right, was enough to bring in an euphoric cycle. Now, why do you hear a lot of people say that retail is not here in this particular phase of the cycle? It's actually very, very simple. It's because the returns that were made on Bitcoin over here from the COVID bottom is actually 1,663%. If we do the same exact thing, right, and we calculate, right, the percentages that Bitcoin was able to achieve after marking this bottom up to the current all-time high, it is a mere 376%. So what does that tell you? That besides the fact, right, that Bitcoin did wipe the previous all-time high, it is not an euphoric stage for Bitcoin, okay? It does not provide, right, the same returns or similar that we have seen before. Like, in order for you to achieve the same exact percentages, right, that we have seen in the previous run, Bitcoin will have to go to 276K. I don't think that will come without a pullback, most importantly, right? And the reason why I'm calling for a pullback, and people say that this situation that we are in right now is different than what we have seen before. It is actually not true. Yes, we did wipe the all-time high prior to an halving. Yes, that is correct. So in that particular situation, yes, it is different, but I really want you guys to go back and see what has happened over here, because what happened over here essentially is very similar to what we have got going on over here on the current price action essentially. Okay, so we just saw, right, that from this bottom over here to this high, Bitcoin went up 376%, correct? Have a look at what has happened over here. We actually have very similar percentages. 344%. Yes, here we did not wipe the all-time high, but it was not an halving year in the first place. Second of all, right, it makes sense that we actually that we didn't wipe the all-time high or anything like that just yet, because yes, we did have liquidity grabs, but we didn't really, well, more like this, right? But we didn't really do anything too crazy. We also had this bearish Fibonacci to pay attention to, which is exactly where we stopped going up to the 61.8%. So here there were actually multiple factors. So we can actually agree, I think, that what we had over here was a bear market rally, right? And my question to you is, why shouldn't this be the same? You may say, well, we wiped the all-time high. But why are we struggling to get above the previous all-time high? Right? Why are we spending so much time in distribution? And I know a lot of people will say this is accumulation. This is not accumulation. Smart money does not accumulate at all-time highs. Get it out of your head. It's not happening. It's really not. This is distribution at most. Because when you are in a range, right? And why did I begin the video explaining what a range is? And that on the total one, we are in a range. Because if you look at Bitcoin, right? We actually have a very similar situation here as well. If this is the premium, right? And I'm going to be removing this just to make it a little bit neater for you guys to see. If this is a range, right? And we don't really measure what has happened over here, And the reason why we don't do it is not cherry picking or anything like that. It's because this was price set in a range, okay? If I skip, right, to what has happened after, right, after marking the bottom, you can actually see that we actually spent most of our time, I would say, at a premium, okay? Here, price was very quick to get through a premium. The first real consolidation came at the equilibrium point of the range. So we know that the range is meaningful, okay? It's not cherry-picked or anything, because price has at a specific type of behavior at key points of the range. This is the equilibrium point, so we know that to be a very important point for ranges. Have a look at what has happened over here. We actually breached above the range, and then we started closing candles back inside of the range. This is something very important, and it will eventually explain throughout this video as to why my arrows are pointing back down to this bottom over here. Okay, I will get into that. But before I do that, right, let's go back. And I know I'm doing a lot of back and forth, guys. It really helps eventually by the end of the video to make you guys understand how everything pieces out together, okay? So we have seen that the percentages that were done to the upside are now very similar. What we have going on over here is a bullish Fibonacci. That until price, right, had a pullback down, it didn't really fulfill the sequence. Because, as I said before, here, what we were looking for was a wipe of a high, right, to justify the incoming bullishness that we know of today. And, you know, this would have not happened without a wipe of a high. Like, for example, right, do you think that this bull run over here would have happened had price not done this before? And let's say that Bitcoin would have stopped going up from here. Would that necessarily have invalidated the whole bearish trend line? Absolutely not. There was somebody, right, that bought this bottom over here and that had enough liquidity to push the price to the upside and liquidating some sort of high on the left. Here, we actually have the very same situation, which is why, as I stated before over here, you know, Bitcoin, technically speaking, could have went and retraced after wiping this high over here. Did I say that before? Because that will make a lot of sense here as well. Because the first significant high that you had on your left in this situation was this high over here. What did price do after wiping this high? It actually started retracing. Very similar situation as to what we have had over here. You can see that this retracement over here, however, was short-term lived, right? Because we continue going to the upside. What do we have over here? Very similar situation. This retracement over here didn't really last too long because we continue going to the upside. If you guys have started to catch up to what I'm trying to say over here, you should be getting very excited. Reason being is because by now you should have understood that during a bear market retrace, right, the higher we go and the more significant highs we wipe, the bigger the euphoric stage. Okay, so let me remove this misconception that there is around about my expectations. I am not a full-blown bearish person. I am a rational trader and a rational investor. I act based on what I see on the chart. I don't marry to narratives, which is the reason why you have not heard me talk about ETFs, you have not heard me talk about election in this video, or anything like that. I do not care about narratives. I only care about what I see on the chart. So, to continue based on what I'm trying to say here is, look, I told you many times about the bullish golden pocket, which just to put it into perspective. I'm gonna bring it out once again, because if we do the same exact thing, right, that we've done below, now you should start to understand why I had this green box over here. You can see that my green box perfectly aligns to the bullish golden pocket levels. Interesting now, isn't it? Because, let's go back to this, because what we have going on, and I will complete this video by showing you guys everything as to why I'm going back and forth between 2020 and 2024. Let me cook. So from this bottom over here to this side, have a look at where we retraced. Because if I go and add a couple of more levels, and I add the 88.6% level of the Fibonacci, we can see that yes, we did go a little bit lower than that. It doesn't really matter because the candle afterwards actually found support perfectly after hitting this specific level. So just for keeping it as simple as possible, I'm not gonna be extremely picky and try to figure out where and why this bounce over here. It's not the point of this video. But if you guys want to learn more about all of this stuff, please let me know. Because if we do apply, right, that same exact logic here as well, well, the 88.6% is actually residing at 22K. Interesting, right? I just gave you guys two particular levels to watch out for, and if you have seen before, you know, my rectangles were there before, and it's for that particular reason that, you know, I'm actually looking for a drive back down between the 37.7K region down to 28.2. Let's go back to 2019 and 2020. What has happened here as well? Well, you can see that we tapped the 61.8% and the 69%. The percentages are the same. The outlook on it is very similar. So no reason to say, no, this is different than that. It's really not. It's really not. So the areas that we should be focusing on, if we really want to get more peaky with it, is this region over here. And I'm gonna change the color of it just to make it easier for you guys to see. Maybe this is too green. I'm gonna be removing the middle line. We don't need that. No borders whatsoever. So the highest probability of an area where we should be looking for a bounce is between 37.7 and 33.6 essentially. Okay, this is the area where it's most likely that we will get a bounce based on the data that we have before. But why are we still looking down to 22K potentially? Look at what has happened here, guys. We had the bounce, right, between the 61% and the 69% Fibonacci levels. Then we went up. However, we maintained here as well that sequence of high, lower, low, because we wiped this low over here. Or let's start from the very get-go, okay? This high, high, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, and so on, right? I think that you guys get it. Pretty sure that you guys get it. Isn't that very similar to what we have going on over here, guys? Pay attention. high, low, lower high, lower 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 low, lower high. I think you guys get the point by now. It's very similar. Let me show you another thing that you may not have noticed so far. After marking this high over here, down to where we went, right? Prior to, was it this low over here? I think it was. Where we essentially hit the 50% area. Here we haven't really done that just yet. However, what I'm trying to show you guys over here is essentially this. Let me actually fix it. It's somewhere around here because we haven't really had the equilibrium point just yet. But the whole point behind what I was trying to show you here is the similarities, right? In terms of how much time we spent into this consolidation and this downward trend. Here we actually have a longer one. But you know, we also have the whole time high and it's still trading inside of that region over there. So, you know, very similar. Obviously there is a little bit of a difference in terms of how much time we actually spent in there. But if you look at it and understand that here we didn't wipe the all-time high, a lot less people were in crypto, and things like that. I think that it really actually looks quite similar if you think about it. And so, you know, answering a popular question that I've gotten: do you think that we will wipe the all-time high? I don't necessarily think that will be the case because what we have going on Bitcoin is actually very similar to this as well. And I've showed this chart before. The S&P 2008 financial crisis. Because the chart that we have going on over here, it's very damn similar to what I expect out of Bitcoin. Sure, of course, this is stocks. We are talking about crypto, so there are a little bit of a difference. But in terms of structure, right? If you think about it, it's actually not too different. And I'm actually gonna switch between these two over here. Not this. This is a cleaner chart for Bitcoin that I have, and you can see that we have a range, just like what we have going on over here. We have two taps to the highs, essentially the first all-time high, then a retrace, and then a new all-time high. You know, same exact situation and playbook of 2021, where we initially had the high at 65k, then we had a retracement, then a new all-time high, and from there onwards we went into a bear market. The S&P did exactly just that, you can see. And after marking the bottom, after taking some liquidity from the lows, we went and done a new all-time high, which is exactly what Bitcoin has done over here as well. But from there onwards, this is where the struggle actually started to come out for the S&P. Here, it is very important that you know that we did wipe the all-time high one more time, but we didn't go and do anything too crazy. It was just a wipe one more time that definitely brought a lot of greed and euphoria back into the market prior to a financial crisis. And you know, it's honestly very similar to what we have going on Bitcoin here as well. The only difference is that I don't necessarily think that an all-time high is needed in the case of Bitcoin. But you know, I'm not ignoring that possibility. It's very crucial that you understand that, because if you go on my posts on Evolio, where have I talked about this? because I have, I literally stated a couple of days ago, Alex says that it's soon time to start selling again. I don't think that we will see a break of the Bitcoin all-time high, and in the slim chance we do, I think it will be short-lived, similar to when in the last cycle, Bitcoin hit 69K before going into a bear market. So unless we start ripping away in a serious manner away from the current all-time high, therefore 80K plus, and actually finding support above the current all-time high, my theory stands valid. Okay, it is very important that you understand that, because based on what I'm seeing over here, I don't feel like it is really needed. And you know, even if we do go up, right, and we go to 74, 75K, does that really change anything if the support, right, feels to be held? Like, does that change anything? It really doesn't. So be careful in the case that we do happen to see that, okay? Because in the slim chance that we do, right, it be bull trap essentially, okay? So one more final thing that I'm gonna touch on before let me actually refresh this before I end this video, because I don't want to make it too long. You know, let me actually show you two things. I apologize for that. Two things. Have a look at what has happened over here. After marking this bottom prior to the sell-off, right? Bitcoin here rallied up a little bit. Let's have a look at where it actually rallied up to, shall we? It got extremely close, right, to this previous high that was made prior to the last significant drop of this downward movement, right? What does that correlate to today's price? Well, if the last significant price, right, the last significant drop was this drop over here, then the last significant high prior to that was this high over here, 69.985. Look at what has happened here, guys. Crypto can become very, very simple when you know what to look at. Look at this high over here. Did Bitcoin go ahead and hit this high? It didn't. Have a look at what we have going on over here, guys. Isn't this the same playbook? Let me know down in the comments, guys. Isn't that the same exact playbook? Because right now, you know, as yesterday as well, yesterday we started dropping, right, on the fact that USDT is getting investigated. There's more geopolitical events, more strikes and all that stuff over there. Pay attention to what the charts is showing you. Because this stuff that I'm showing you guys today is the stuff that I've been worrying about throughout all this time, whether it be on Involio or in the Profit Miners community, which you guys can find, of course, the link down below. But you know, it's literally the same playbook. So in the slim chance, right, that we do have a little bit more upside, because on this particular chart over here, we didn't do this, we didn't touch this high, but on some other charts we have. Not gonna get too much into that, because it's really even on the other charts, a simple tap of this previous high prior to it going down, which is the reason why I have this rectangle over here. The highest I see Bitcoin going, regardless of elections, regardless of whatever you guys want to use as an excuse or as a narrative, I believe it's going to be 69.9 up to 71.9 at the worst case scenario. And to be honest with you, I don't really see it go up above 71. Okay, so before I conclude this video, zoom out. What do you see me looking at? First of all, I found the same exact correlations that you have been shown today on Bitcoin on the total chart, because here we didn't print a new all-time high. And if Bitcoin is the main driver of the total, right, then why is this not a new all-time high? That is, of course, the altcoins. But all coins, guys, different story. I will leave that for another video, perhaps. Okay, so you know, these are the levels that I'm watching for on Bitcoin, and you're as well. You know, I showed you guys the 88.6% of that fib. I'll also give you guys that specific level, 88.6. 22.2. So before I leave this video, just so I can also use this chart as a reference point, to remind you guys, right, as we proceed into this next phase of the market, this is very conservative level target. Just in case there is any sort of wick fishing that we need to account for. This is the level that I will be watching for, this green area that is not as green as this area over here. Here, I'm going to clone it. High probability target. High probability target. And 22.2K in this case is essentially this. High probability target, and here of course we have conservative target, which is 17.7K. And the reason why I have 17.7 is because at the end of the day this is a range, okay? And how ranges work is essentially this. You have, right, your high and your low, and usually on ranges what you see is that when you have a wipe of either direction, whether it be the high or low, then the opposite direction tends to come in, okay? Which is the reason why I'm looking for also potentially a wipe of this lower year. So 17 to this lower year, which is 15K if I'm not mistaken, are conservative targets based on the fact that we are in a range. But higher probability target is due to the fact of this scenario that we had before. But you know, 17.7 down to 15.6 conservative target, that is due to the fact of the range in which we're in. Okay, it's very important that you guys understand that. High probability target due to these factors that we have over here. The same goes for the first targets where we are likely going to see somewhat of a bounce. Okay, 33.5 or 33.6 if you guys want to put it that way, up to 37.7. Okay, this is your high probability target. Conservative target 28.2. So hopefully you guys enjoyed today's video. I hopefully I really broke it down as to why I'm expecting certain levels. Again, it's not me being bearish or anything. I'm thinking about it logically. Like literally everybody tells you, which is why I'm a contrarian trader, that this is going to happen. Based on what is that going to happen? Like the only narrative that you guys have left, all you perma bulls, is the elections. After the elections, what is exactly going to provide you with that potential push to the upside? You may say adoption. It's not the first time that Bitcoin is getting adopted by Tesla or MicroStrategy or whatever you guys want to use as an excuse. It's really not. So what do you have left after that? Please let me know in your comments. You know, I'm not criticizing perma bulls or anything. I really just want to understand your point of view as to why you don't think that this cannot happen. I'm trying to make you guys think logically. Anyway, guys, thank you guys so much for watching. If you enjoyed this video, please, guys, leave a like, subscribe for more content like this. Comment down below your thoughts. I really want to know your thoughts. If you guys want to join Profit Man, there's a link down below. Follow me on Infolio and all that good stuff. And I'll see you guys in the next video. Peace.